Hey there, future financial wizards. Let's talk credit cards. These little pieces of plastic can be incredibly powerful tools in your financial arsenal. Don't worry, this isn't a lecture. Think of it as a friendly chat about this powerful financial tool. Credit cards can open doors to opportunities, but they can also lead to pitfalls if not used wisely. Used wisely, credit cards can be your best friend. They offer convenience, rewards, and can even help build your credit score, which is crucial for future financial endeavors like buying a house or a car. But be warned, they can quickly turn into your worst enemy if you're not careful. High interest rates and late fees can lead to a mountain of debt that feels impossible to climb. We'll break down everything you need to know about credit cards, from how they work to the magical world of credit scores. Understanding these basics can help you make informed decisions and avoid common pitfalls. We'll keep things simple, fun, and easy to understand. No jargon, just straightforward advice that you can use in your everyday life. Ready to unlock the secrets of responsible credit card use? Let's dive in. We'll explore tips and tricks to maximize benefits while minimizing risks. This is just the beginning of our credit card adventure. We'll guide you through the journey, helping you understand how to use credit cards to your advantage. In the next section, we'll use a simple analogy to understand what a credit card actually is. Think of it as a tool that can either build or break your financial house. Get ready for some tasty comparisons. We'll make sure you have all the ingredients for a successful financial recipe. Ever been out with a friend who forgets their wallet? You generously offer to pay for their meal, and they promise to pay you back later. That, my friends, is the basic idea behind a credit card. Think of a credit card as a temporary loan from a bank or credit card company. You use their money to make purchases, and then you pay them back later. It's like borrowing a bite of your friend's delicious pizza, but instead of pizza, it's money. Of course, there's a bit more to it than that. In the next section, we'll explore how credit cards work in real-life situations, from online shopping sprees to those much-needed coffee runs. Let's say you're buying a new pair of shoes online. You've been eyeing them for weeks, and finally, you decide to make the purchase. At checkout, you enter your credit card information. You carefully type in the numbers, expiration date, and security code. Behind the scenes, the credit card company swoops in and pays for the shoes on your behalf. This process happens in a matter of seconds, ensuring a smooth transaction. You get your stylish new kicks, and the credit card company adds the purchase to your account. You feel a sense of satisfaction as you try on your new shoes. At the end of the month, you receive a statement listing all your credit card purchases. This statement is a detailed record of your spending habits. This is your cue to pay back the credit card company for all those lattes, movie tickets, and of course, those fabulous shoes. Each item is listed with the date and amount spent. You can choose to pay the entire balance or just a portion of it. Paying the full balance means you won't incur any interest charges. But what happens if you don't pay the full balance? The remaining amount rolls over to the next month. That's where things get interesting, and not in a good way. Interest starts to accumulate on the unpaid balance, making your debt grow. We'll unravel the mystery of interest rates in the next section. Understanding how interest works is crucial to managing your credit card wisely. Imagine your credit card as a cool car you get to drive. It's sleek, it's shiny, and it can take you places. But just like any car, it has its limitations. But here's the catch. The credit card company sets a limit on how far you can drive, just like your car has a fuel tank. This limit ensures you don't go too far and end up stranded. This limit is called your credit limit. It's a predefined boundary set by your credit card issuer. It's the maximum amount of money you can borrow at any given time. Think of it as the ceiling of your financial room. Your credit limit depends on several factors, like your credit history, income, and spending habits. The better your credit score and financial health, the higher your limit might be. The credit card company wants to make sure you can handle the responsibility of borrowing money before letting you loose on a shopping spree. They assess your financial behavior to gauge your reliability. So, credit limits act as spending guardrails, preventing you from overspending and ending up in debt. They are there to protect you from financial pitfalls. But what happens if you go over your limit? Exceeding your credit limit can lead to various consequences, such as fees, higher interest rates, and a negative impact on your credit score. Stay tuned for the next section, where we'll explore the consequences of exceeding your credit limit. We'll dive into the details of what happens when you push past those guardrails and how to avoid it.